What's up, you guys? Zoe here from OneGlanceTrader.com, and in this week's video I've got another trading strategy for you guys, this time using the concept of pivot points. And if you guys want to check out all my other trading strategies, you can click the link in the top right corner or the link below, which will take you to the trading strategies playlist. Now, with all my trading strategy tutorials, I walk you guys through step by step in terms of what the setup is, take profit, stop loss, all that kind of good stuff, trade management. So without further ado, let's get into this particular strategy. So in terms of what the strategy is, it is a trend trading strategy that looks for a pullback in the trend. Now, for those of you, who've been watching my channel for a while, you guys know I have transitioned into a counter trend trader, into a trend trader for various reasons. But this type of strategy takes into account, trend trading strategy and looking to get value by looking for that particular pullback in a trend. And there are two main indicators that this strategy uses. The first one is a daily pivot point indicator, and I'll go into in the next slide what pivot points are. But unfortunately, there is no pivot point indicator that comes standard as part of the MT4 platform. However, I managed to find one on the internet. The link is in the description, where you can just download the .ex4 file, and it's absolutely free. And then when you click on the link in the description, it will take you to my cloud storage account through Box. And again, you'll see a download button in the middle or in the top right corner. Just click on that and it will download the indicator straight away for you. You also need some EMAs. So for those of you who have looked at my videos around dull guppies, you'll notice a familiar pattern here with these particular EMAs. So these are dull guppies, long-term moving average EAs, and we're going to use these EAs in a particular order to determine the trend. So we'll go into that with some examples shortly. And then what I've done is, once you've downloaded the pivot point indicator and stuck it in your indicators folder in your MT4 terminal, you can download, again, link is all in the description, the MT4 template, which basically sets up the input settings for the pivot indicator and sets up all your EMAs for you, because I know it can be a pain to just put six or five EMAs in there and set and tweaking the period. So again, you can download the template, then everything is set for you and you are ready to go. In terms of time frames, I particularly prefer the 15-minute time frame, but you can use the 30-minute. If you use the 1 hour, it's a bit difficult, I think, because you're not going to get that many signals, and also it's harder to kind of time your entries on there because of the bar is quite a big bar, i.e. it's a 1 hour bar. So I think the 15 or 30-minute is the preference. You can go to 5, but again, I prefer to go with the 15-minute because it's a bit more established in terms of identifying the trend. So what are pivot points? So pivot points are deemed as natural support and resistance levels. So similar to, the round numbers indicator, so where price, naturally acts as support and resistance at 00 or 50 levels, Fibonacci levels, all these type of tools that traders have. Pivot points is another one of those that can be used as natural support and resistance. And the reason why a lot of traders and institutions are deemed to use pivot points, because they are objective. So again, similar to round number levels, it doesn't matter whether it's you're looking at my trading chart or someone else's trading chart, it's the same level. And assuming that everyone has the same broker close time close, your pivot points are going to be exactly the same. Unlike Fibonacci, where I might deem a low to be slightly higher, or where my swing low is and swing high is, again, it's a bit more objective, and therefore the kind of where it draws the levels is going to be different from chart to chart. So just to give you, you don't need to know the calculation. Again, the indicator does all this for you, but the pivot point is the high plus low plus close divided by 3. And again, the high, low, and close you can do from a daily, weekly, or monthly. So you can get daily pivot points, monthly, weekly pivot points. And the pivot points we're going to be using is daily pivot points. So when you input the template onto your MT4 platform, it will already have in the input settings that it's calculating it on a daily basis. I've also put resistance one as a support one. Again, these are just levels off the pivot point, and again, generally you can calculate it up to R3 and to S3. And for this trading strategy, we're only going to be looking at the daily pivot point, the daily resistance one, and the daily support one. And the R1 and S1 are traditionally take profits and stop loss kind of targets to be aiming for. And again, one of the reasons why a lot of people like to use pivot points, because they have a very high hit rate in terms of how many times a pivot point is touched. So the daily pivot point, is hit around 75 to 80% of the time. Now, I'm working on a different strategy which uses the daily pivot point as a take profit target, because if it gets hit 75 to 80% of the time, you are in a good place to know that it's going to hit that pivot point at some point. The only thing I'm still trying to work out is, if it doesn't, how do we take our risk off the table and where to set our actual stop loss. So that's something I'm working on behind the scenes. I'm testing a few different things, and hopefully to release a video on my kind of strategy on that. So I just need to do a bit more work on that. But in this particular one, it's a pullback in the trend, and we are looking for price to be in a trend, pull back to the pivot point, and then shoot up in the direction of the main trend. So that's basically what we're trying to do. So step one of this strategy is that the previous day's close on the 15 or 30-minute chart either needs to be in an uptrend or a downtrend. So I've given a few examples. So this line distinguishes that on the left side you've got the previous day, and on the right hand side you've got the current day. And as you can see, when the day closes, you can see that the EMAs are all aligned in a certain area. So for an uptrend, you've got the 30 EMA at the top and the 60 EMA at the bottom, and then you've got the 35, 40, and 50 EMAs in between. And they're all pointing, they're all layered in the right direction. They're not crossed over or anything like that. So that is distinguished. So when this day opens, we can confirm we are in an upwards trend. Similarly, for a downward trend, you've got the 30 at the bottom and the 60 at the top, and all the other EMAs in between. So when the day opens, we are looking. We can say that we are currently inside a downtrend. So that's the first step. If this criteria is not met, then there is no trade on that particular pair for that day, because the previous day has to close in a trend up or down. So it doesn't matter which way direction it is, it just has to do that. So that is step one, and the most critical factor of this particular strategy, because what we don't want to do, we don't want to be trading in a day sorry, we don't want to be trading in a day where it was ranging, and then it hits the pivot point and it doesn't go in the direction we want it to go. So we want to make sure the momentum, we are trading with the momentum of the previous day's trend. So the next step then is that we wait for price to hit the daily pivot. That's the next step, and then we look to take a trade inside that direction. So I've got an example here. So we've got the previous day and we've got the current day. So at the moment, the previous day has closed, and as you can see, you've got the 30 and the 60. All the EMAs are in the right direction for an uptrend. And then what it's done, when the new day opens, the indicator will print the daily pivot point, the resistance one, and support one. So when the new day starts, you can see that price then starts to go down, and then you can see here it has hit the pivot point. Now, the next element of that is, when the pivot is hit, the EMAs still need to be aligned. If the EMAs are not aligned, then there is no trade. So just to confirm, that is, as soon as price hits this level, we're looking at the EMAs, and as you can see, the EMAs are still aligned. And basically what that is signifying, that even though price has gone into the congestion of the EMAs, all those resistance kind of potential lines that it's got, it hasn't broken the structure of those EMAs, implying in Dal Guppy's terms, the long-term investors or traders are still holding on to this pair. We still think we are bullish in this environment. So as soon as it hits and we've got confirmation that none of the EMAs have been ruined or ruined its structure, what we do is that we place the trade. Then what we do is that we set again your risk management 1, 2, 3% depending on how you want to play it. That's a very subjective and personal thing, so I'm not going to go into that in this video. But in terms of stop loss, we set our stop loss at support 1. We then set our take profit 1 at the previous high. So we look at where the highs are for the the previous day at this level here, and we'll set our TP1 there, and then our take profit 2 is at R1. Then what we do is we then wait. We then wait for price to see what happens. It nearly hit the TP1 there, but you can see here that it hit the TP1 quite comfortably with this wick here. When this happens, there's a couple of things you can do. There's a lot of things you can do. My personal favorite, what I've been experimenting is that we move the stop loss to break even. Sorry, that's meant to be to the pivot point, not to to break even to where we enter to the pivot point when we hit TP1. And then what we do in this particular example is that you can see that price then would have hit our break even at the daily pivot, and therefore we would have closed out on this trade at a scratch. But what then you've also seen here is we've also seen that it has hit the pivot point again. And again, I was going to do a zoomed in screenshot, but at the time where this was touched, at this level here, when you actually zoom in, the EMAs still maintain their structure. So therefore, even though they're very squeezed together, they have still not broken their structure, which then gave us another signal to go in long, set stop loss at S1, TP1 is the previous high, and TP2 is R1. So as you can see, pretty much straight away, we hit TP1, we move the stop loss to break even at the daily pivot, and then price continues to run on and hit TP2. So therefore, the first trade was a break-even trade, and the second trade was a winner. So that is ultimately the strategy. And what I've got two more examples, and I'll go through them very quickly. And again, you can go back and kind of review. So another buy trade example, you've got the previous day and you've got the current day. You can see as the day closed, you've got the EMAs all aligned into the same structure. Then what we've got a touch here of the pivot, of the daily pivot. Again, it pulls back into the daily pivot. All the EMAs, and again, I haven't zoomed in on this one, but I checked this, that all the EMAs are aligned. You put your stop loss at S1, TP1 at the previous highs, and then TP2 at R1. And then you can see here it does this, and it goes down over here and hits this again. Now at this point you've got two options. If that does happen and the EMAs do align and you're still in another trade, you can decide whether you want to take another signal or just ignore the signal. But in this particular example, you can't see it here because again we're a bit squashed in, but if you zoomed in on your MT4 platform, you will notice that the 30 is already crossed over with the 35 EMA. So this wouldn't be a signal because the structure has been broken of the EMAs, and that's very critical that is. Even though this trade worked out and you know is a winner in hindsight, you don't know that. And when EMAs get bunched up together like that, especially when price breaks underneath here, it held at this point and it hits here and it starts stretching over. is a signal that it might reverse. So therefore, you'd been worried about this particular trade, but things worked out. We then hit the TP1, stop would have got moved to break even, and then you would have easily comfortably got to TP2 and beyond. And when you get to TP2, you can start trailing. You can do anything you want in terms of money management, and that's down to you. But this is just a basic framework for you to work from that perspective. And then lastly, a sell example, because I wanted to kind of show both sides. Again, the day closed. Again, all EMAs are aligned from the 30 to 60. Price then comes into those EMAs, and this is quite a strong signal in my view, because you've got the EMAs and inside the pivot line. Again, look how much support and resistance, the battle that price has to get through a daily pivot, and also all these EMA lines. And again, probably on my OGT price action indicator, I don't think it probably would have given a signal for a pin bar, but again, another formation of a pin bar. So again, you've got confluence factors there of a pin bar forming, and look what happened then to price. In that particular scenario. So in this one, you would use R1 as your stop loss, the previous lows in this example as your TP1. When TP1 gets hit at this level here, stop gets moved to break even, and again comfortably hits your S1. So that is the trading strategy in a nutshell. Again, go back and watch the video again, but the key thing is that you enter the new day in a trend, and you do that by the EMAs aligning. Again, there's no guesswork in this. You just look at the chart. The EMAs are in the correct order. Therefore, you then put an alert at the daily pivot point. When the daily pivot point gets hit, you look at the EMAs. The EMAs are still aligned. You open the trade. You set your stop loss at the, in this example that I'm showing on the screen now, at your resistance level. You set your TP1 at the previous low as your first take profit target, and then you set your TP2 at, in this example, support 1, and make sure that you move your stop loss to break even when TP1 has been hit. And again, slightly a bit different. Not seen it, done in this type of way, but I really hope that you've enjoyed me walking you through this strategy. And like I said earlier, I've got a number of strategy videos that you can see on the screen now, so I really hope that you check that one out, and I shall see you guys in a second.